Thanks for joining this webinar. Couple things I want to just share. This is a continuing ed webinar for AIA credit learning units. So there will be poll questions that I'll be launching throughout the webinar. I'll give you guys about 20-30 seconds or so to answer them, and then we will keep on moving, and that's how we'll use to keep track. Please make sure, if you are looking to get continuing education credits for this, that you provide your license number to me. You can do so via email, just by responding back to your emails that you received for the webinar. So this is a kind of a basic level introduction to Section 179D and 45L and some of the major changes that have been enacted as part of the Inflation Reduction Act. I've done these in the past. Some of you folks may have already been a part of these webinars in the past. I mean, there's, you know, as we move, I don't know, what are we, 8-9 months away, you know, retreated and removed from the Inflation Reduction Act being brought into law. You know, we're starting to wait very patiently for guidance to be issued by the Treasury Department that'll help kind of clarify some of these things. But there have been some things that have been issued kind of along the way, and some interpretations that we've been able to make and feel good about as we move forward. So I appreciate you guys being on, following us. I know we got a ton of clients and on this webinar, so always we're very thankful for your loyalty and your business to Walker Reed. So thanks for that. A little bit about Walker Reed, just so you guys know who we are. If you're not familiar with us, we're a specialty energy tax incentive provider. We specialize specifically in a couple different areas, one being the Section 179D tax deduction, which is an energy efficient commercial building tax deduction that works for both government, nonprofit, as well as private building owners. And we also specialize in the Section 45L tax credit, which is a residential energy efficient homes tax credit. We do the 45L specifically for large developers, apartment builders, and home builders. We do quite a bit of home builders as well. So that's really our two areas of specialty. We are in the process of, we work with a ton of CPA firms. We're kind of the back office to most of the specialty tax world and the CPA firms, where we are their engineering arm, right? Most CPA firms and you know, specialty tax incentive providers aren't necessarily engineers. There's a lot of attorneys and CPAs, but not necessarily have engineering expertise. We tend to bridge that gap for folks. We are an engineering firm at our core, so we're really an MEP firm. That's our specialty. That's our license. We understand energy. We understand energy engineering. It's what we're really good at. We know just about enough about tax and accounting to be very dangerous and be able to bridge the gap between the complex engineering sections of these incentives and the tax side, and how those applicabilities and implications and all the different dynamic things that happen as part of the applicability of these tax laws. So it gets down, you know, it seems simple on its face, but we go down some serious rabbit holes sometimes. We're also, as part of our growth strategy this year, we're happy to announce that we're about to launch a modeling services for energy modeling, BIM modeling, daylight analysis, and life cycle analysis as well. You know, we're hoping to, you know, as we've been the back office and subcontracting office arm to CPA firms in the past, we also want to do the same for the architects and engineers who, you know, with all the staffing issues and staff augmentation problems, you know, we have a great team of you know, about 50 folks and we can really service your needs when it comes to all these additional things. So it's something that we're excited about. We're going to be putting out a press release here shortly. It's already up on our website. So if you guys have any needs around that, we're happy to assist with that as well. So a little bit about me. I'm David Diaz. I'm one of the owners and managing partner here at Walker Reed Strategies. Been involved in this world and honestly in construction and engineering my whole life, my whole career. Started around that space. I was general contractor, owned a design build general contracting business before we got into the space. Kind of ran into this by accident in 2008-9, and we got headhunted to my partner got headhunted to possibly start a division for a firm doing these incentives, and brought it to me, told me about it, and we were looking for something else to do. And here we are almost, I guess we're going on 14, 15 years at this point later. So we've bumped our head a lot along the way, learned a lot. I tend to consider myself a subject matter expert. Many of you already do consider me a subject matter expert in these areas. So I'm happy to be able to provide with the knowledge I've learned over the years and my interpretation on some of these advanced topics. So thank you once again for attending. A little housekeeping as well. If you have any questions as we go throughout the process and we go through the webinar, feel free, pop them in the Q&A. I would prefer that you guys use the Q&A question and answer box and not the webinar chat. I'm running solo today, and I'm running I don't have any co-hosts with me. So if you guys can keep them all in the question and answer, I'll do my best to get to them. If we end up with a ton of questions and I can't get to them all throughout the webinar, I'll circle back to you, and I'll email you directly on the question that you asked. If for some reason I don't get it, or it's in the weeds a little bit, and I don't find it extremely relevant, or whatever the case might be. So a little bit about 179D, the history of 179D, what it's been, just so you have an understanding of where, in order to understand where we're going, where the Inflation Reduction Act has taken us, it's important that you understand where we are in the intent, right? I tell this, I'm on a lot of calls with a lot of you guys, and I always bring this up, and it's a very important area that everyone needs to understand. If you understand the overall intent of the law, and you have a true, and you can really kind of comprehend what they're trying to do and accomplish, a lot of this stuff becomes kind of intuitive, and it starts to make a lot of sense to you. So with that being said, 179D and 45L, the overall intent when they were originally enacted as part of the Energy Policy Act of 2005, the overall intent here is to reduce the energy consumption of buildings, right? Reduce carbon footprint, reduce the energy consumption, and motivate the building owners and the folks making investment and making capital improvements, whether it be in a retrofit capacity or in a new capacity. The overall intent is to motivate you guys to design and spend your money on more energy efficient components of the building, right? Like with any great piece of legislation that has a great intent behind it, right? There's always areas where they fall short, and areas. Am I on mute? No, I'm not on mute. Okay, sorry. I had a thing pop up that says unmute myself, but you guys can hear me, right? If you just pop in the question and answer, I want to make sure. Okay, thank God. That would have been embarrassing. Awesome, thank you. So that was funny. I'm looking at this button that says unmute yourself, and I'm going, wait a minute. So great. So with any good piece of legislation, sometimes you run into a situation where they miss the mark, right? Or the legislation that was enacted, Congress takes a little bit of time to kind of get it right with the way it's being applied and whatnot. So that's been a situation that one has created a bunch of opportunity in the private sector and for designers as well. down the road. So, but what we've seen is in 2005, as part of our 2006, when they brought 179D into play and the 485L as well. The intention here is to reduce energy overall, right? So it's to drive a capital improvement around these energy efficient improvements, right? Whether it be in the case of new construction, making sure that it's designed properly on the front end. When we're looking at some of the biggest facilities and square footage and consumers of energy in the country around government agencies and government-owned buildings and schools and whatnot, part of this incentive has a kicker where it allows the deduction to be allocated to those designers, right? Because if the designers have a carrot being dangled for them, when they're designing, that they can have a tax incentive for building or designing an energy efficient building that then meets certain criteria and requirements throughout on the other side of it, right? Once it gets constructed and enacted, it's intended to motivate you guys, right? Now, has that been the way that it necessarily has been used? Not necessarily, right? Most of the time, the way, it's here to motivate. Very, very few folks look at this on the front end and say, hey, I want to make sure I design to this target. Now, they do look at buildings and go, I want to make sure this building is energy efficient. I don't know if historically the incentives have been high enough to motivate anybody to really move the needle enough to say, hey, we are in a situation where we need to make sure we get this $1.80 a square foot or 60 cents a square foot and design more energy efficiently. I don't think that's been the case. And I think Congress has overall missed the mark from the point of view of the energy standards that are being used or have been used in the past for 179D purposes. They've missed the mark a little bit there from require and what the requirements have been, and they've missed the mark a little bit from what the benefit side has been, which a lot of that is getting flushed out and fixed as part of the Inflation Reduction Act changes, which it's nice to see. Overall, I've been seeing the trend happening where I'm on a lot more calls where I'm consulting ESCOs or energy service companies or architects or engineers or subcontractors to these industries. I'm consulting them on how to help use this incentive the right way, how to help them monetize projects and help drive new projects, new infrastructure spending, new CapEx spending. So these are things that I've been seeing quite a bit of lately, and it's nice, honestly, being in the industry and being a advocate for energy efficiency and energy conservation. It's nice to see the incentives with some longevity, having it being extended for made permanent, and then furthermore being expended for 10 years. It is nice to see the use of this actually happening in a way where we've never been able to use it before, right? This has been an ongoing law that has existed and then expired and then existed again and then expired again. And nobody's ever been able to really count on it from the point of view of making a decision that would substantially impact the business. And on top of that, on the flip side of this is, even when you did have some longevity or a couple of years, the dollars weren't enough to move the needle to make you do anything differently to move forward. So again, it's still a very lucrative incentive, very attractive incentive, one that's been used, and I'm very thankful for it. It's built a great business for us around these incentives. But on the flip side, now we're starting to really see some of these major improvements that to the way it's working as part of the Inflation Reduction Act. And again, a lot of that is going to have caveats, and we're going to be waiting on some legislation to happen here. But that's a big part of it. So I'll go through this real quick, just in case anybody needs a refresher of what the 179D is for projects, and 179D and 45L. So any projects that have been placed in service in 2022 or prior, these would be the requirements overall for qualification. So as far as what the benefit amount is with Section 179D, there's two buckets to it. There's the private sector, and then there's the government building owners. It's up to $1.88 per square foot. It still can be divided amongst multiple categories: lighting, HVAC, building envelope, about 63 cents a piece, gets split up there. Depending on what qualifies. I tell you, 95%, I think we ran the numbers, 96% of the projects we certified last year met the full 50% reduction and achieved the $1.88 per square foot in 2022. And so, for folks who are looking at this going, hey, $1.88, I thought this was $1.80. There was, as part of when they made 179D permanent and Consolidated Appropriations Act a couple of years ago, they added an inflation kicker. So there's a calculation that could be done to enhance the deduction a little bit to adjust for inflation. I think 2021 was like $1.82. Now we're $1.88 in 2022. So that's the reason for that. So it's essentially the original 60 cents from the law per category, full $1.80 for the 50% or more whole building qualification, with an additional little kicker for the inflation on there. And then the 45L, which is the residential tax credit, is a $2,000 per dwelling unit. So it's per door, per home that's built, tax credit. So this is a very, very attractive and lucrative piece of legislation that we do quite a bit of, and has been very good for the home builders and apartment developers and whatnot. So as far as who can benefit, when we look at 179D in the private sector, the 179D in the private sector goes to the taxpayer. So it's important. It's taxpayer who has basis at the time of construction. So they are impacting the decision making. And again, this goes back to the understanding of who can take advantage of these incentives. It goes back to understanding that it's trying to motivate whoever's spending the money on this building to build or retrofit it energy efficient. So you have to have basis in the building, and you, for the most part, you should be holding on to this building for an extended period of time, because it is in the private sector, it's an accelerated depreciation benefit. So about 3-4 years is the break-even point there. Goes very, very well, plays very well with cost segregation, because it kind of picks up areas that cost segregation could not reclassify. So the 179D is a good candidate there, where it allows you to work very well with cost seg. So if you're doing a cost seg study, you're always going to have really great benefit from a cost seg study. You're also going to get, if you have the need, or the taxpayer has the need for the additional depreciation benefit, this makes for a great opportunity that allows them to take more year one accelerated depreciation. And again, if it was placed in service in 22 or before, up to $1.88 per square foot. So you can kind of combine them together. We work with a ton of the cost seg firms and fixed asset groups. So it's a great opportunity and a great synergistic play for your clients. As far as the 179D for designers, so the key here is that it's for designers. It's like architects, engineers, could be contractors, could be general contractors, anybody who's involved but they have to be involved in the design. That's the key. They have to have a primary responsibility and involvement in the design, and they may have the deduction allocated to them. So the point here is that designer has, some ability to influence the energy efficiency of these buildings. And because the government agencies cannot allocate the deduction over, it has the opportunity to allocate. They don't have the ability to take the deduction. The government agencies don't themselves. They have the opportunity to allocate the deductions over to these designers for doing so. And as far as the 45L tax credit, it's for residential developer, home builders, apartment owners as well. So project types, pretty much new construction, retrofit is the key. Major retrofits or improvements work. and any new construction. As far as 45L goes, it's primarily new construction. The retrofit would have to be a major renovation, including windows, doors, and whatnot, for the 45L to really start to come into play when we look at it on that side. So as far as the deadlines go, there used to be deadlines. This used to be a major category. There was always an expiring deadline. So it's great now. Once upon ID has been made permanent, on all ends. It has the Inflation Reduction Act changes have a 10-year window, but either way, it was made permanent before that. So it would just, if that went away in 10 years, it would essentially revert back. But odds are Congress will do something with it, make some changes. Everybody's always tweaking around with these incentives. So, and the 45L was extended for 10 years under the Inflation Reduction Act. Honestly, there's great opportunity to qualify for all of these incentives. The energy criteria engineering requirements are still ASHRAE 2007 and 2006 IACC when we look at it for the 45L tax credit. So there's a really good qualification standard. I mean, you're looking at very antiquated or older standards. I think we're 4 code sections removed from some of these ahead of time. So you are going to end up qualifying for the most part. I mean, there are projects that don't qualify. 45L has a little bit, less chance. We run into more buildings that just don't meet the requirement when we look at 45L. Depending on the climate zone and the weather and the software there, it can be finicky sometimes. But with the 179D, the odds are pretty high in most areas. In most buildings are going to end up meeting the requirements, qualifying. So as far as what needs to be done in order for you to successfully take one of these deductions, the key here is that you have to have an independent third party verifier go out and perform the engineering, site visits, and meet all the requirements and provide essentially a deliverable or a certificate that allows you to take these incentives. So, and that's the role that our firm plays, right? So we're that independent third party certifier that works on doing all of these incentives for you guys. So that's our role. That's where why we get involved in these projects is to be that independent third party. So I got a question that came in. It says, can the 179D credit be split between engineering and architect? Yes, essentially the 179D, thank you for the question, good question. And do note that it is a deduction, not a credit, and it can be split amongst multiple parties. So you do have the ability to share it. I've seen it shared 5 or 6 ways. This guy gets 10%, that guy gets 20, he gets 5. It gets kind of messy. It's more common to see like a 50-50 split between an architect and an engineer. A lot of times what ends up happening is whoever has the contractual relationship tends to kind of govern that and have a little bit more pull as to what they're getting and whoever has the actual design contract. So a lot of times, it depends how it's structured, right? But, a very common scenario is you'll see like an architect is the prime, has the contract with the government agency, and then they hire the engineer as a subcontractor under them. It is essentially at the government agency's discretion who they can allocate it. So it is their decision to allocate it. They may choose, hey, no, we have a contract with you. We're only allocating it to the person we have a contract with. Or they can choose to allocate it amongst the designers. As long as they were involved in the design and had input in the design, which most MEP firms do, right? Of the energy efficient components, then in that situation, you are we're in a good spot. So thanks for the question. Great question. All right. So at this point, I'm going to pop up our first poll and give you guys a couple minutes to answer, and then I'll close the poll after about 30 seconds. So. I give you guys a little bit more time to answer. Another 10, 15 seconds. Seems like everybody's still getting after it. Great. Thank you guys so much for the answers there. And again, this is part of the reporting requirements for continuing ed. So I appreciate it. I'll get the guys who are slacking or doing email another 5 seconds here. All right, I appreciate it. Thank you. Okay, so let's move on. Thanks for the answers. So big changes coming. I laugh at my Stark Game of Thrones slide. I've been so excited to use that forever. So there's some big changes coming when it comes to 179D and 45Vel starting in 2023. So we'll jump right into it. In 2023, the major changes, the Inflation Reduction Act came into play, and they have some big headlines, right? Huge headlines as part of this. One is, hey, 179D is going to be expanded to $5 a square foot. I made it so big on the slide just so everybody, and shout out to my graphics design people. They made this cool slide. I got everybody stealing this thing, changing their colors. Going from $1.88 all the way to $5 a foot. And that really is a big opportunity and a big incentive bump. Now, just like everything else, there's a little tick for tack, right? There's always a caveat, right? So in order to get the $5 a foot and this higher deduction amount, they're enacted prevailing wage and apprenticeship requirements that need to be met in order to qualify. So if you look at this chart right here, where I'm kind of hovering over, you'll see if a project meets the incentives and meets the prevailing wage requirements, you can, with a 25% reduction against the ASHRAE standard in place, you can get a $2.50 per square foot tax deduction. And then for each percentage point additional of savings that is achieved as part of the energy model, so after the 25%, each percentage point savings against that ASHRAE baseline, you get 10 cents additional until you hit 50%. Anything 50% or greater will get capped or maximized at the $5 a foot. But in order to be in this tier and in this category, you have to meet the prevailing wage and apprenticeship requirement, which I will get into in more detail on the following slide. We're waiting for, and it's important that you guys are aware. So we are waiting for the IRS and Department of Treasury to issue the guidance around both 179D and 45L Inflation Reduction Act changes. And honestly, we're waiting, the accounting industry, there was a lot of pieces to this bill. And there's a lot of guidance that needs to come out, because the law is very, it's the law, right? And these things are allowed and can be done and can be certified this way. But, all the guidance that actually tells us how to actually perform these and what statements and what things need to occur in order for us to issue a valid and legal certification to our clients starting in 2023, those things haven't been put out yet. Historically, when there's changes like this, third, fourth quarter, end of third quarter, fourth quarter is a good time frame to expect, right? Normally what they'll do is they will issue these guidance just in time for the next upcoming tax filing season. So obviously, if there are 2023 projects that were placed in service, you're not going to go use that until you start filing your taxes in 2024, right? You're always filing your last year's taxes at some point in 24, whether it be March or September if you're on fiscal year filing. That's pretty typical. So our expectation is before the filing season, we expect to have this guidance. In the meantime, I'll just keep fielding 500 questions, about, hey, can I do this? Can I do that? Can you do a study? Unfortunately, we can contract with you. We can do an energy analysis and let you know yes, this building will meet the requirements. We feel very good that it's going to be, hit the targets per ASHRAE. But we can't really issue you a final deliverable until we get that guidance, right? If for some reason, we jump into tax filing season and the IRS hasn't issued those guidance, us as a firm we'll have to make some decision as far as what our studies will look like, what the statements will be based on past historic stuff. I mean, at the end of the day, it is law. We are good to go with this stuff. So it's not like we're as far as the 179D goes, it's pretty easy from that point of view. But we'd like to not have to circle back and redo work if it's unnecessary. So yeah, just keep that in mind that we are waiting on guidance, and there are some question marks, right? There's some stuff that'll come up that I'll have to tell you, hey, we don't know how that's going to handle. One of them being, I got one yesterday where they're asking me about parking garages and lighting. Well, 179D used to have what was called the interim rule, which was like a simplified reduction, energy lighting reduction for the lighting category. You can go analyze the lighting pretty easily, and it was the methodology used for parking garages. Well, now that parking garages, now that the Inflation Reduction Act pretty much changed the energy percentage target to this 25%, it's a whole building analysis. Our understanding based on the law is, hey, this interim rule is no longer going to be applicable. So that may come up as part of the guidance where they'll realize that, if they take that away, the parking garage lighting is no longer going to be an opportunity because there's no real way to model it because it doesn't meet the standards of ASHRAE 90.1. So they'll have to give us either a methodology or it'll go away. So it'll be one or the other, right? And I have a feeling that they'll address it, or we'll have a methodology in place to do so. But those are all things that we're kind of waiting for, that we're left in limbo until these things come up. So got a couple questions here. Says, if we're allocating the 179D to the designer, do the designers have to wait until the property goes into service to utilize the deduction? Yes, that's a good question. Absolutely. So the building needs to be placed into service, and in that year is the year in which you are able to take advantage of the deduction. So that's if a building gets designed in 2021 but doesn't get placed in service until 2023, you cannot use the deduction until the building is actually a beneficial use, and it's placed in service from a depreciation perspective. That's kind of the key component there. It's not a very common one. So beneficial use, TCO, tends to be the one there. So thank you for that. Another question says, if an apartment building started leasing in 2022, but the leases were in 2023, do the units need to meet the new energy standard or IECC old standard? And that's a 45L question. That's a very great question. Thank you. We have no idea. I'm hoping, because I brought this question up to a couple House and Ways Committee folks, some Finance Committee folks. I was in DC at a conference, and I asked the presenter, and I said, hey, how are we treating this? And they had no clue. They were like, what? Oh, that's an issue. It really, I'm hoping it gets addressed. We submitted this as part of our questions when the IRS issued a request for a comment on 179D and 45L Inflation Reduction Act notices that they're working on. And this was one of the things that actually Walker Reed put in there, because there's no way to go back and retroactively meet these targets for 45L under the standards. So, and I'll get into that a little deeper when I go into the 45L side, but unfortunately we don't know how they're going to treat this yet, and we don't know how we're going to be able to use it. I'm hoping that common sense would say they would grandfather in units, right? Hey, if the building was built, when was the building built? What year was it completed? If these buildings didn't lease until the following year, you would be able to take them based on the previous standard. But who knows what they'll do. Thanks for the question. Another question is, are the Inflation Reduction Act changes based on ASHRAE 90.1, but what year? So that's a great question as well. The Inflation Reduction Act, they start in, you said 2022 in your question, they actually start in 23 and beyond. I guess the IRA was in 22. So, but as far as the ASHRAE standard goes, the IRS issued a notice. It's on our website. So if you go to the 179D about 179D section on our site, or the blogs on our website either as well. I wrote a blog about it. So they issued notice, I think it was actually notice like 22 or 23001. It was one that happened early on in the year where they clarified what the ASHRAE standard was going to be. And basically we're going to be locked into ASHRAE 2007 all the way through the end of 2026. So anything that's placed in service through the end of 2026 will meet ASHRAE 2007 as the standard. Anything after that point is going to jump up to ASHRAE 2019. So they're going to do a huge jump, which was kind of what I was referring to early on in the webinar about what they were looking at. And that's going to be a big jump, right? So it's going to get very challenging starting in 2027 to take advantage of the 179D. It's not going to put it to USA. Buildings that actually go into this with a mindset of energy efficiency, and they're trying to build an energy efficient building, are not going to have any issues at all. Maybe they don't get the full 50%, but maybe they get 40% or 45%. They get $450 a square foot. It's still going to be pretty substantial. And technology will continue to increase and things will get better, but it's going to be important at that point to have a really competent team to do all the energy modeling. I hate to say that, but a lot of these shops that are out there that are law firms and just business folks that think they can go and hire engineering resources to go do 179D because it's easy, right? And anybody can do energy modeling, and I know my cousin's an energy modeler. All those guys are going to really struggle if you don't have the right training competency, know how to read the tax law and the intricacies around the energy modeling. And this even happens with no offense to any of the MEP firms on the call. I have this discussion often with the MEP guys. They're like, there's no way this building can meet the requirements. And then I have to go and I explain it to them and go, hey, you're trying to do this off of the wrong modeling guidelines. You don't know that there's very specific ways to model this stuff as part of the 179D tax law. So it gets kind of hairy if you don't know how to do it, and you do it just like you do any other building. You're not going to qualify. You're not going to qualify under ASHRAE 2007. You're not going to meet the standard. So you really got to know what you're doing to get this done. But that was a very long way to answer your question about it. It is going to be ASHRAE 2007 through the end of 2026. So one more question. It says, if you've never used 179D, how far back can you go to take the deduction? So that's a loaded question. It depends on, are we talking about the private sector or are we talking about a government-owned building? So, and you being the designer. If you were the designer, you can only go back whatever is open and amendable tax years, which is normally the last 3 years, can be opened up and amended. If you are a private building owner and you built a building 5-6 years ago, or you made major energy improvements 5-6 years ago to your building, you can go back and do what's called a 3115 change of accounting method and adjust your depreciation schedule and take the deduction in the current tax year. So the key there to that question is, one, if you're a government building owner or a designer of government buildings, you can take the deduction, only go back open amendable tax years. If not, if you're private sector, you have pretty much open range, right? You can go back. It starts to not make much sense after like 7 years or so. It starts to, the costs don't really outweigh the benefit because you've already taken a bunch of depreciation. But that's it. We can look at that on a case by case basis. Thanks for the questions, guys. Great job. I love it when people ask questions on the webinar. It keeps things fresh and not boring. So all right, let's get into this prevailing wage a little bit. So a couple things that you guys need to know with regards to prevailing wage. So prevailing wage, essentially what needs to happen here is, Congress kind of said, hey, labor is important. We want to make sure our folks are getting paid the highest rates in the area. So it's important that everybody's meeting the SAM.gov Davis-Bacon Act wage rates in order, if you want to take advantage and get these higher deduction amounts for these incentives. So, and this wasn't just tied for 179 45L. I mean, these prevailing wage and inflation adjustments under the Inflation Reduction Act, they spread through a wide array of different components. So it's basically you have to have all the labor on the job has to get paid the going wage that's published on sam.gov for that area. You have to keep records that everybody was paid that. If for some reason the labor rates were not published for your zip code, you guys have to reach out to the Department of Labor and get what the rates would be for the work type and for the person in that region. And then the other thing that's important and kind of a pain is that 12.5% of the total labor hours that are being done on this job have to be performed by apprentices. So again, the intent here is to kind of expand the workforce. There's a workforce crisis. They're trying to motivate big business to make sure that these things are happening by providing these incentives. So that's the key there. And again, if we go back to the previous slide, if it's not that 179D, it's all or nothing, right? If you don't meet the prevailing wage, you can still take 179D. It's at a reduced amount. Now you're getting 50 cents and a max of $1 versus you get a nice big kicker of $2.50 to $5 a square foot if you do meet the prevailing wage. Most of the folks I'm talking to in the government space aren't too worried about it. The prevailing wage, the designers, there's a lot of things that we're waiting on as far as 179D's applicability with some of this stuff. What's going to be the documentation requirement is on as far as the allocation goes with these prevailing wage. Is it going to be part of the allocation letter? Is it not? There's these things that we're hoping to hash out with the guidance, and I'm hoping they do a good job with it, because there's a lot of questions around this. We know what the requirements need to be, but and we know that you need to keep books of record, and the prevailing wage notice and guidelines came out. But there's still questions about it when you're not the taxpayer. How does this need to be treated, right? You guys don't own these government-owned buildings. You don't have control. If you're a designer, you don't have control over the labor and stuff that's occurring on these jobs. If you're a designer, architect or engineer, you're not really privy to this information. So how do they want us to address this? Those are all things that we're waiting to see. And if you logged on today hoping that I had the magical answers, I hate to tell you that unfortunately we're still waiting. So we'll see what happens, and we'll see how these things get addressed. But I still don't have anything else other than speculation, and I'd rather not bring those up. So a couple things that are important as far as the 179D and the changes that are coming up. In addition to the prevailing wage, that's a big one, right? There's a lot of requirements there, but there's some other expansions. One, it's now tax exempt building owners may allocate the deduction as well. So now 179D historically has only been government owned buildings. Now we're expanding beyond that, and we're going to nonprofits, tribal governments. There's a big expansion there. This is something that if you're a designer, architect, engineer, it's going to start coming into play. It's going to be part of your RFPs. Hey, that big hospital system that's a nonprofit, that wants to build a new, huge contract for a new hospital or improvements. They're going to start using this as a leveraging tool. Do you want, hey, we want 179D to be included. Can you give me a discount? These things are going to start coming to play. That nonprofit world is used to operating with donations and grants and free money. They're going to want a piece of this, right? Where the government agencies historically, that hasn't been the case, a little bit, but not too much. This is definitely going to start to affect the way you work with nonprofits if you do work in that space. So it's better to know what to do on the front end, have a conversation with your CPA, have a conversation with us. bring everybody together. Let's come up with a strategy so that you guys aren't lost when we're doing this on the other side. So as far as the allocation goes, we're expecting the rules to allocate to these tax exempt entities. We're expecting these rules to be very similar to what we've done in the past, but as far as the allocation goes, but we're not sure. We got to wait for the guidance to come out. There's going to also be a new qualifying methodology for analyzing for retrofits. So it's going to be an actual energy consumption methodology. And this may be where, I was talking earlier about the parking garages. This may be the catch-all for that, and in the retrofit world, right? There's an existing parking garage, you're retrofitting it. The catch-all may be using this energy intensity, use intensity analysis for the retrofits. I know us, Walker Reed as a firm, our goal, this is kind of I call it the M&V, so measurement and verification analysis methodology. It's not the formal name. I just coined it because I felt like coining it something. So this M&V analysis, right? It's going to be, you come in before the retrofit, you analyze what's the energy use of the building. You come in on the back end, a year later, and you analyze what the savings were. We don't have any guidance on this right now. We just know it exists. We have some general law, big picture stuff, but we're going to wait for the IRS to issue some guidance on this. I'm pretty sure, our methodology is going to be to avoid using this strategy as often as possible and go down the modeling path, especially as long as we're under ASHRAE 2007. I think it'll be an easier qualification, and we're going to see much better results on that end. But once we get the guidance, we'll do some beta testing and we'll come down. We'll figure it out. So another big one that's going to create a ton of opportunity is that now buildings, historically, once of an ID was a one and done. You certified it. Once that building, you got $1.80 a square foot on that building, you're done. You couldn't certify it anymore, right? Now they've added the ability to go claim private owned buildings. You can claim them every 3 years, but you have to have new capital improvements are done, right? So if you had a building, let's say you did a lighting project in 2020, and then now in 2024 you go in and you do a major HVAC project, and we already took a 179D, got you $1.80 back in 2020. Now, 3 years later, we can go and potentially get you up to that $5 a foot for that new work that was done. But you have to have new capital improvements. It's not like, hey, we did a project in 2020 and now we come in 2023 and we go recertify it again and get you a deduction again. That's not how it works. New CapEx has to have been spent in order to get that. And then on the government side, it's every 4 years. But this is going to create a bunch of opportunities for the folks who do phased out projects. I have a lot of my ESCO clients. We do a ton of phased work. They're always working in phase 1, phase 2. I mean, I was looking at jobs for phase 12 or 13 the other day on a project, and starting in 2023, right, we can go back and say, hey, 4 years ago we certified this building. Now can we look at it again, get them the $5 a foot based on this new phase of work that was done? So that's going to create some really nice opportunities for your repeat clients. A lot of you work on a lot of school districts, a lot of government buildings where you're in there year after year, doing this work for them, designing and constantly improving based on budgets and this and that. Now we can go back and say, hey, let's look at these opportunities and where do they lie and what can we mine out of this? And is this, a scenario where we can go and double down and get the deduction again in the future? So, bring those to us, let us help you go weed through them and analyze them and make those determinations. So there were some changes that made the 179ID more applicable to REITs, but honestly, I just needed to kind of make my presentation symmetrical because it doesn't really mean much to anybody. And the REITs are probably still not going to use 179D. All right, I keep forgetting. I got to pop another poll question up here to keep everybody happy. Let's go back. Let's go poll question number 2. I think it's not that timely, but I'll give you guys a couple minutes to answer this one. It's fun. I get to watch the guys who do the wrong answer and know you guys weren't paying attention. I'm just kidding, but it's kind of funny. Do another like 10 seconds and then we'll end the poll. Perfect. Appreciate it. Thank you guys. All right. All right, let's move on. So so some of the, did I go backwards? No. All right, 179D, I talked about this as far as the designers go, and I bring this slide up again. It's important, right? The designer piece. You know, the next part of this series of webinar that I'm doing, I'm kind of digging into the audit guidelines. There was a recent case that came out around 179D. I'm going to jump into some of the weeds, right? It's an hour and a half long. You guys get to listen to me for an hour and a half. Can you imagine how wonderful that would be? Just kidding. But it's a long one. I'm going to dig into really, you know, the key takeaway from this slide is it's important that you are actually the designer and actually involved in the design. It's the one area that the IRS goes after pretty heavily when we look at designers, and especially, you know, architects, engineers, pretty black and white. When we start getting into the general contractors and the contracting world, you know, it gets a little trickier there. So I'll be going over a bunch of that on the next webinar. So 45L, you know, if you were on here waiting patiently for the 45L stuff, so great news is they made once a 45L available through the end of 2022. Awesome news. Let's go and certify as much of that as possible this tax year for the past project. Now, there's a lot of questions around 45, a ton. I mean, I got into it a little bit already on one of the past questions. You know, we have no idea if, you know, it's when you read the law, it really goes, you know, you look at it and you go, oh, this is simple. If you meet, you know, the Energy Star requirements, you're going to get 2,500. If you meet the Zero Energy Ready Homes requirement, you're getting 5,000. You know, as long as you qualify for one of those two programs, you get the credit. It's not that simple though, you know, at the end, and there's a lot of folks, a lot of my competitors out there going, hey, it is that simple. It's really not, because we don't, until they issue the guidance and tell us how they want us to use those requirements. And, you know, my gut is just like they've done with 179D, and they point to different sections and code sections. They're going to do the same with the Energy Star and the Zero Energy Ready Homes. And it's not going to be as simple as just, do you have is this home Energy Star rated? Yes or no. I don't think it's going to be that black and white. I think there's going to be other requirements. I think there's going to be other you know, other situations at the end. So yeah, so that's my take on that. You know, I think we need to just wait and see. I've been telling everybody, I got a whole list. I mean, if you have some relevant 45L, you know, I got you on a list. Let me know, shoot me an email. I'll put you on the list and we'll get back to you after that. So, and then, you know, once we actually have guidance and I can actually push in the right direction. The key thing is that they're going to expand it 2,500 or 5,000. Multifamily homes are going to take a big hit, in my opinion. The multifamily homes and apartments are going to be required to meet prevailing wage, where the home builders are not. I don't know how much of the apartment work and the developers are using prevailing wage, and I don't know if it's enough to move the needle for them to do so. So that's something we're going to have to wait and see what the market kind of flushes out there and whether or not they make sense for the prevailing wage. And you know, one of the things that's going around is that, hey, you know, the 3-story requirement, 45L has always historically been 3 stories or more or less, I'm sorry, on apartment buildings, that's out the window. That's, you know, I don't know who came up with that or what marketing piece, you know, popped that out, or why, you know, who ran with that, but I haven't seen that anywhere. And until the guidance comes out, you know, I can see where folks can make some assumptions and take some leaps and paths to get there and go, hey, you know what, if we're doing Energy Star 3.1 has certain requirements and different height requirements. So now the height requirement goes out the window, you know, until Treasury puts it out and we got the guidance. That's all fugazi. It's all imaginary. So Q&A we've kind of been doing. I got a couple other ones about the slides and the recording. Yes, I'll definitely send everything out after. I got one last poll question that I want to do because it's important to me. Let me find it. I'll get it out here and then I'll share all the poll. All right. So that's my next poll question. I'm a baseball guy. I love baseball. I was at a conference with a bunch of CPAs and we got into a very intense discussion in Vegas about what the best baseball movie is. So I need to know so I can share it with my with the client who I was having the discussion with. So I'd love to get everybody's feedback. So yeah, and while you guys are doing that one, since it's a fun one, get another question here that asked if the allocation is on a first come, first served basis, and how does that really work? I mean, honestly, it shouldn't be on a first come, first served basis, but it ends up being that way in many scenarios. It's completely at the discretion of the government agency who they allocate these things to. So that's really one of the ones that the way it works, right? It's they have the discretion to allocate it to anybody that's a designer on the project. A lot of times whoever shows up first ends up getting it, but that's not necessarily the case. A lot of times it's driven by the contract. So I know that's, it varies in so many things, right? When we go to the federal government, there's there's a process and guidelines. That stuff exists already. But outside of that, there's not really any formalized process when you get into a lot of the tertiary and secondary markets of government agencies. So, all right, let's go. Another question says, under the assumption that prevailing wage and apprenticeship rules will be for the construction firm, can you now imagine fighting the deduction when it's intended for the designer? Yeah. Now we will have to ask the contract for the wage information. Yeah. So that's a good question. Thank you. I agree. The question is basically, it's already paying to go get an allocation letter. Can you imagine how much more difficult it's going to be to go get wage information? And that's what I'm hoping that this gets addressed as part of the guidance. So I had the same concern of this question. It's in my head. I'm going, this is going to be a nightmare. I'm hoping it gets addressed and it gets flushed out as part of the guidance, where maybe it's simply a additional attestation as part of the allocation letter. That would be the ideal thing, where the government agency says this project meets the prevailing wage requirements as part of that allocation letter, and they sign off on it. It might make the allocation process a little bit more difficult, but I think that it could be addressed that way, because I think as a designer, you trying to go out and getting the wage information is going to be a really uphill battle. So, I know. I can include this, I guess, CE question I can include there. If anybody was interested in the poll questions, I will end this poll. I'm going to share the results. Looks like Field of Dreams won that one. Close second, Major League. Rookie of the Year and Angels in the outfield after. So, all right. Everybody want to see the other poll question? I'll share the results here. The right answer here, I don't remember what my question is. It does not meet. The right answer was $1 a square foot. So if it does not meet prevailing wage under the Changes Inflation Reduction Act, it is $1 a square foot. And last one. So yeah, let me share the results there. Same deal. The inflation reduction, who may be allocated, and again, it's any one of these above: general contractor, architect, MEP, ESCO. As long as they were primarily responsible for the design, may be allocated the deduction. So, so that being said, I appreciate everybody's time. If anybody has any questions or anything, feel free to email, and we'll go from there. Thank you all for your time today, and have a great, wonderful rest of your week. And if you are interested in digging deeper, feel free to sign up for the other, I believe it's June 15th or so. Sign up for the other webinar that's going to dig into kind of the intricacies around audits and who is being audited, why they're being audited, what the IRS is looking at an audit, how to prevent and kind of navigate around that area. So I'm happy to dig into that a little bit. Thank you all and have a great day. Bye-bye.